I'll just wait for that. Okay, so good afternoon, everybody, and welcome to the next PA Forum Zoom series. We are delighted today to be joined by Malcolm Taylor from Your Excellency Limited. This has purely been a fantastic response, really, to this course. Financial awareness for EAs, PAs, and administrative professionals. It's a course we've never had before. Malcolm has actually got a masterclass taking place later on the 12th of August, which is a full day course available. And we really wanted to give you a bit of a taster as to what that course is all going to be about, but for you to have some fantastic takeaways to take away with you today. So I'd like to just say a massive thank you to Malcolm for joining us. And without further ado, I think it's over to you.
Okay, thanks, Dan. I'm really excited about doing this. When Dan first asked me, I don't know, maybe 3 or 4 weeks ago, I thought, oh great, yes, 45 minutes, an hour. We'll have a cozy little group of 4 or 5 people, and I can put together some loose topics and we can just chat around what people would like to do. And then all of a sudden he said, well, I've got 10, I've got 20, I've got 30, and I think the list ended up yesterday, 40. So I was thinking, oh, okay, so maybe I need to think how we can do this with 40 people. So we'll have a quick look at that shortly. So Dan's already said, Lindsay and I, Your Excellency Limited in 2007, and Lindsay very much focuses on you guys and operates in your world, and I do similar sort of stuff, but I also do quite a bit of commercial and finance thing based on where I came from and what I did. So my profile picture is quite interesting. That I'm supposed to look like this, but actually my daughter has said that during lockdown and not being able to get to the barbers, I look a bit more like this, and actually it's the main reason I'm wearing a headset, because actually really it's a headband here. So this is Count Olaf, who apparently I look like. And then when she told me that, I looked up who Count Olaf was, and Count Olaf is a character in a book, children's book, called A Series of Unfortunate Events. So actually I wish I hadn't have looked at that before doing this event, but hopefully it's not too unfortunate here. So what are we going to do today? 45 minutes with quite a lot of people. So this is what I thought. For me, the biggest thing about finance, and maybe why we've got quite a few people on here that are prepared to jump in for 45 minutes or so, is that finance seems to be a very mysterious or magic subject. And whenever we get involved in it, the biggest barrier to understanding finance is actually the finance organization themselves. So a bit like, other professions, whether we're lawyers or engineers or whatever, we use our own jargon. And soon as we look at a financial statement and it's a tsunami of numbers, jargon, it's like, I just want to leave it and let's move away from that. But I truly believe that once you understand 1 or 2 of the basic principles, remove the jargon, that actually it is quite straightforward and it's quite obvious. So bit of a challenge in 45 minutes. Dan wants me to show you everything, of which I spent about 5 years training and 25 years practicing and 13 years teaching, and you want it all in 45 minutes. But let's see if we could do a little taster just in order to understand what it is that we need to measure, and then how the jargon gets in the way of that. And if we could do a little bit of jargon busting, then maybe the smoke will disappear and we might be able to see the clear light of day. So a couple of little topics here, one around the measuring, a little session on jargon, and then we'll see how we get on with a large group of people with some Q&A. So we might not be able to get to all of the questions today. We'll try, but what we don't get to today, you have my contact details through the Zoom invite. Please feel free to contact me and see what you need, and I'm always willing to help. So let's get started. Let's see what we can do. Okay, so is finance, is it mystery or is it magic? Well, actually, it's neither. It's just about keeping count, or in finance terms, account, keeping account. So, all right, just letting some more people in. Welcome those just joining us. So from a personal perspective, even when we go, before we go into business or working within our business, we personally keep count or account of our money. Now we may not be very good at that, and we may find that the month is too long and the month runs out much quicker than our money does. But actually, we do try and keep count of our own money, and we have different ways of doing that. But really, that's all that businesses do, is keep count or account of their money. So what I thought we would do is to have a look and see if we can compare how we might look after or account for our own money, and how that is similar, or actually finance makes it a bit different because they introduce this language of finance-ish to us, as to how it's very much the same. So I've created a little example here. I have no idea where Sean came from. I have no idea who Sean is. So I've just created an example, and I decided to use Sean as an example. So the exact numbers in here are not important and not particularly relevant, but I just wanted to use this as a type of principle to understand how Sean might report her monthly finances, and then how we might translate that into a business. So let's walk through this quick example here. So Sean has a salary of 1,000. The number doesn't really matter. It's just nice round numbers to make it simple. So let's say on a monthly basis, Sean has a salary of 1,000. She was looking at a particular month as to where her money went, and she had what I call consumables. So every 2 or 3 days, she went to the supermarket, went and bought some money, went and bought some food. She needed some fuel, perhaps for a car, and maybe some travel around the train or the bus. So she had some consumables that were used during the month, and she spent 350 of 1,000 on these items here. She also, as with any other month, had some regular monthly costs. And I've just got some examples here that she might have to pay rent, just to pay a gas and electricity bill. She also has some help with some childcare or nursery costs or something similar to that. She's like quite a lot of us. She wastes 25 a month on a gym subscription, and she never goes to the gym, but that's her problem. And she also has a maintenance contract in case her boiler breaks. So she spends these, and these are regular, and some of the other items are more sort of around consumables. So here we go. At the end of the month, she starts off with 1,000, spends her consumables, spends her normal costs, and at the end of the month, she's pretty good, Sean, actually. She has 150 left over, which she can then decide what she wants to do with it. Maybe she puts it in a savings account. Maybe she's saving for a holiday or a new car, or has some money put by, in case needs a new washing machine or dishwasher or something for the garden, or something breaks down or something. So that's her accounts. So we can understand that. It might be similar to how we operate our own. But actually, when we come to business, the business does exactly the same thing. The difference is that the language changes, because we have to learn to speak this finance-ish. So let's take an example. Let's say that Sean, it isn't Sean's personal money. Sean runs her own business. Sean makes, I've just picked this up randomly, Sean makes little leather pen holders and pots. She's got a little business going for that. So the same thing, she might look after her own finances. She needs to keep count or account of her own business finances. So the first thing that she needs to do is to look after the performance of her business and measure it. This is a profit and loss statement, commonly called a P&L, profit and loss. Sometimes, in fact, you might even hear it called an income statement. Traditionally, it's a P&L, profit and loss. More modern language uses something called an income statement. Lots of Americanisms that have, for many reasons, have come into our financial language. So let's have a look at what this profit and loss statement looks like and how some of this terminology changes, even if the numbers were the same, with Sian's little business here. So she has a revenue, sales revenue. So where this was her salary, money coming in, this is her selling her products. Now notice the color coding I've used here to make it memorable for you. Think about our traffic light approach to business. Green is good, so she's selling stuff, money coming in, it's good. So revenue, sales, or income, or turnover is the money you get for doing what you do, selling little leather pen pot holders. But of course she has some costs against that. So she might have her consumables. In business, we call it cost of sales. So the cost of sales is the costs that are directly incurred in her making her product. Somebody once said to me, doing business is easy. You buy stuff, make stuff, and sell stuff. As long as you make more than it costs you to buy, as long as you sell it for more than it costs you to buy and make it, you have a business. So this is what it's costing her to buy and make pens or pen pot holders. So she has some materials, maybe some leather, maybe some thread to go through. It's consumables, maybe she has some glue to stick it on, but she spends $350 on making the product. So at the end of the month, $1,000 of sales, $350 of cost of making it. She's got a profit at that stage of $650. So that's called our gross profit. That's how much we make by producing and selling leather pen pot holders. But of course, a bit like Sian, the individual, Sian Limited, the business, has some monthly, some regular costs. And maybe these are similar to these sort of things, but business language might be a little bit different. So the first thing that she could do here is that apart from having 650 profit, we have a measurement here. So you often hear the term margin. So if somebody asks you what the profit is, or in this case, the gross profit, you would expect the number to be expressed as pounds, dollars, euros, yen, whatever currency we're working in. But if somebody says, what's the margin is a measurement as to how much profit did we make, 650, as a proportion of how much we sold, 1,000. So we could do some quick maths here. 650 profit as a proportion of 1,000 is nice and conveniently 65%. Margin is the percentage performance. So she's also got some other costs here in her business. So yeah, they're monthly costs, yes, but we call them overheads, or maybe indirect costs. These are direct, these are indirect. She might have the same sort of thing, but they might appear in a different form. Rent, utilities, payroll, because maybe she's paying somebody. Personally, she's paying somebody to look after the children. Here, she might be paying somebody to do the administration or do the books or do the cleaning or do some of the gluing or the sticking, so somebody on the payroll. She might have some subscriptions, perhaps to trade magazines or something. She might need her equipment, her leather cutter or whatever she used to make pots. We might need that done. So the principle's the same. The language changes a little bit. And of course, we don't say what you got left over at the end of the month, Sian Limited. We use what we're probably familiar with, the term profit. So the principle of looking after your own money, what's coming in, what's going out, what have I got left over, what's your personal performance for the month, the business does exactly the same. So the P&L, or the profit and loss, is a performance statement for a business for a period of time. So in this case, we've measured it for a month. We might measure it for a full quarter, and a lot of businesses report internally or externally for a quarter. And certainly we would do it for the full financial year. How much stuff did we sell? How much did we incur in making or doing whatever we do? And what were the additional costs? What's left over is our profit. So this is one of the key financial statements. We might have lots of other reports that hang off of this. We might want to know, what materials did we buy and how much did they cost, or what was the rent for? We might have lots of analysis around this, but it pretty much hangs off this, our business performance statement called the P&L. That's one statement. Now, Sian might want to look at her finances for the month, but she might want to know, what else have I got? How wealthy am I? So let's have a look at what she might look at from that perspective. So let's have a look at Sian's current wealth. Different measurement. She's looking at how wealthy am I right now at this point in time. So she needs to work out, what does she own? What belongs to her? And what's the value of it? So she might have a house. Only if she owns the house, not if it's rented, but it has to be her house. So she's got a house and she paid 100,000 for it. She's got a car. Has to be her car, not a leased car, has to belong to her. She might have, normal white goods and things in the kitchen, or, some other stuff. She might have some personal tech, iPhone, iPad, laptop, etc. She might have an ISA and some savings. I think Sian's quite a smart cookie looking at it. She's got quite a lot of things that's going on here. She's got the money in the bank account. She's also, she was ready for lockdown. She's got a big stock of food. She was the one that had all the toilet rolls and the pasta when we couldn't get any back in March. She had 500's worth of all that stuff. Very prudent. Cupboards are always full. She's got an inventory in the garage as well. Oh, and she's the classic big sister. Little brother always comes, sis, can you lend me some money? So actually her brother owes her £1,000. So she's got a total of 122,500 of houses, cars, equipment, cash, and some money owed to her by somebody else. But of course, that's not the full story. She does owe some money to some other people. So although she's got a house at 100,000, she has actually got a mortgage on it. So 80,000 of a mortgage, a car of 10, she actually owes 8,000 on the loan of it. And at the moment, right at this moment of time, she owes 500 on her Visa card. So she's got all this stuff here, but she owes this stuff here. I use the word stuff a lot. It's a technical term. So here, 122.5, owes 88.5. So how wealthy is she? 122 less 88 is 34. My son, I remember when he was a bit younger, he used to love looking up film stars, sports people, what's their net worth. And you can look at this stuff, it's all estimated, but the net worth would be what belongs to them, what do they owe to other people, that's how wealthy they are. So that's Sian's wealth. Right now, it might be different tomorrow, might be different last week, but right now, this is what she's got, this is what she owes, this is how wealthy she is. Businesses do exactly the same thing. So you can guess what's going to happen now. So we need another report. The P&L is about our performance for a period of time. We need to create a wealth statement as to how wealthy the business is right now. This is the balance sheet. What balances have we got on all of our various things? Sometimes you will hear it described as a position statement. What's our position statement? What's our position right now? So let's translate Sian's personal wealth into the Sian Limited professional looking balance sheet. Let's see. So what does the business own? Well, we give it a name. It's assets. So these are Sian's personal assets, but these are business assets. So let's see what we might describe some of these things. Property, vehicles, production equipment. This might be a machine or something that she cuts the leather or makes her leather pots with. Some IT equipment, you know, the business laptop, desktop, whatever. The business maybe's got some investments or savings or some money that it's put away. It's got a normal bank current account. Doesn't have a stock of food, but it might have a stock or an inventory of spare leather, spare thread, whatever else goes in here. This has got some felt on the inside, whatever it is that they use, some spare things. It could be some finished goods, some ones they haven't sold yet, or it could be some raw materials, but we call that inventory. Another Americanism, but we're probably quite familiar with that one. And here's another piece of finance-ish for you. So receivables, you may hear this. So receivables is the money that is owed to us from somebody else. So in the same way as Sian's brother owes her 1,000, this might be a customer. We sold them some pots, we delivered them some pots, but right now they haven't paid us. Not because they're naughty or they're a bad debt, but because perhaps we gave them day payment terms. So it's not cash yet, but it will be. So when you sell it and they don't pay you, it becomes a receivable. When they pay you, the receivable will go away, but the money will go in your bank account. So it's cash not yet received. Nice and easy. Another Americanism. We used to use the word debtors, but debtors, creditors, who owes who. I like the receivables term. So that's what the business owns, 122,500. But what does the business owe? Well, same as Sian, but the terminology is liabilities. What's our liability? At this moment in time, how much do we owe to other people or other organisations or other businesses? So it might be a mortgage, but it might be a bank loan. It might be a lease on our vehicles. And the opposite of receivables is payables. So this is money that we owe to third parties, and payables is usually money we owe to suppliers. So it might be that I've received some leather to make my pots from my supplier, and they said, oh, you can have this now, Sian Limited, but here's the invoice, but pay me in 30 days' time. So I might have some inventory, but it might be that I still owe the bill. So it's a payable. So receivables and payables, nice, easy US language. Receivables is for what we're about to be received, maybe be truly thankful to our customers and clients. And payables is, I've got some bills to pay later because they've done something for me. They've given me some product or provided a service to me. So we can finish this off, total liabilities. And the wealth, it's still the business wealth, but the language we use is net assets. Net means gross assets, net of, or less the liabilities. It's the same as your net pay. Your gross pay is how much you get paid. The net pay is how much you're left over once the HMRC and pension fund and everything else is taken out. So net is the good stuff. I've put it in green. Sometimes, you know, you'll see that as a positive number. The bad stuff we've got to pay, is in red, and often it goes in brackets or parentheses as well. So you won't necessarily see it on a statement in green and red. I've just used that to make it memorable for you, but you might see it as a positive number, negative number. Same on the P&L. The positive was the revenue. That's what we get for selling stuff. The red or the brackets is the costs, the money that's gone out. So that is the two main financial statements, or at least two of the three. You'll be able to pick this up on the recordings if you want to go back and have a look at this particular piece. But I got a little summary here for you. So there's three main financial statements. So there's the income statement known as the P&L. It's a performance statement. It's for a period of time, certainly for a year, but we might want to have a look at it each month or each quarter. And what does it measure? It measures our performance in terms of our revenue and our costs. The other one we've just looked at there is the balance sheet, or sometimes called a position statement. So it doesn't measure performance, it measures wealth. and it's a snapshot. It's a camera, it's a photograph at a point in time. How wealthy am I right now? So normally you take that photograph at the end of the financial period. So at the end of the year, you'll have how have we performed for the whole year and how wealthy are we on the last day of the year. And to measure our wealth, we need to know what our assets are, what belongs to us, less anything that we're due to pay, our liabilities. They're the two we looked at. There is another one. We haven't quite got time to go through that in full today, but this is a cash flow statement. And what this actually measures is just the movements in cash for a period of time. So normally it will be the same period of time that we look at our profit, and it will say how much money came in and how much money went out and how much money have I got left over, what's the balance. It could be thought to be very similar to the profit and loss, but because of a number of technical terms and rules, sometimes the cash and the profit are different. So when I do a full course, my message that I keep on and people get fed up with hearing it, but it's important to understand cash and profit are different. You can make a profit, but you might run out of cash, which is no good at all. You can make a loss, but you might still have cash, so you can keep going. My thing says you can make a loss for several periods, but you can only run out of cash once, because then it's over. So we would go to that into more detail if we had a bit more time. But we've had a look at measuring performance, P&L, measuring wealth, balance sheet, and just touched on there's a cash thing as well that's really important. All right, so that's the first part of today. So we've already done a little bit of the next piece, but I thought it might be useful to do a little bit of jargon busting. Tricky to know, you know, if I was to pick 8 or 10 pieces of jargon, which one to pick. But, you know, feel free to ask me afterwards or send me a note, or maybe you want to join the full one-day course and do loads of jargon busting. But as I said before, for me, it's important that I truly believe that once you understand some of the jargon and cut through that, actually the principles of finance are quite straightforward. We just proved that with Sian looking after her money and then putting it into business jargon. So I've picked a few here that are fairly common that you may or you may not already know. So let's go through these 5 on here one at a time. So the income statement, covered this a little bit. The income statement is another name or the common name for the P&L. And P&L is just an acronym for profit and loss. So it's the profit and loss, the performance statement. Revenue, so we touched on that. Sometimes what's confusing is that we use different names for exactly the same thing, depending on the business you're working in, what your finance or decide to call it, or the industry. So revenue is the same as sales. Sometimes the words are put together, sales revenue. It's also the same as turnover. So what it means is, what do we get in return for selling our products or our services? So Sian Limited sold some pots in the month, and her revenue, the business revenue, was 1,000. It's the top line. OPEX. OPEX versus CAPEX. We spend quite a bit of time in the full day course going into the detail of these. But you hear it amongst the office, or if you're in a business or operations review. You know, what's the OPEX expenditure? Or what are we spending on CAPEX? Or is that CAPEX? OPEX? I don't know, because I don't know what the hell you're talking about. So let's see if we can unpick this just a little bit. So OPEX. It is short for operating expenditure. It is the day-to-day running costs of the business. And because it's the running costs and impacts our performance, it's all of the costs that are on the P&L. So for Sian Limited, where we saw rent, utilities, subscriptions, materials, consumables, can't remember the others I put on there, they are all operating expenses. It's what we do and spend, you know, day to day to run our business. Whereas CAPEX is capital expenditure. Usually these are the high ticket items, so it's expensive stuff, and it's stuff, technical term, stuff, that we buy that is for the long-term benefit of the business. So it could be property, it could be production equipment, it could be office equipment, it could be IT equipment, it could be vehicles. It's things that we are going to use in the business over the long term, not the day-to-day running cost, the long-term stuff. So usually it's quite expensive and it's going to benefit us in the long term. Now, actually, finance people are not very long-term people. So when we say long-term, actually what we mean is more than 1 year. So we're going to buy this machine, building, vehicle, piece of equipment, and we're going to use it in the business for more than 1 year. And what we do with that is we don't want to put it on our P&L, mainly because it's very expensive. Is if we look at the P&L, it would send our P&L pretty poor looking. If we had a big piece of £1 million piece of equipment we're going to use for 10 years, we don't want to put it on the P&L because we'd have a rubbish P&L this year. But the next 9 years, it'd look a bit better. So what we do is we put it on the balance sheet as part of our wealth, as an asset, and leave it there for 10 years. But actually what happens is that we then use this next piece of terminology, which does seem to be finance magic, called depreciation. So depreciation is saying that we recognize we buy a big piece of equipment, we don't want to put it on our P&L, so we put it on the balance sheet, park it there. But our business performance on the P&L, we're using that equipment as part of our performance. So what we do is we say, how long are we going to use that equipment for? Maybe 10 years. So every year, finance make an adjustment and move 1/10 of the equipment that they purchased, balance sheet, and move it to the P&L and call it depreciation. We'll go into that a little bit more when we have time. But OPEX is day-to-day running costs. CAPEX is long-term equipment or investment purchases, and depreciation is a way of spreading the cost or the impact of this over the P&L for its useful business life. Okay, I've got another page here as well with a few on here, and actually this is perfect because somebody, Naomi's preempted here and asked me a question as to what's accruals. Oh, I need a list. How about that? Now, Naomi and I were rehearsing that one at 7:30 this morning to make sure she asked that question. The last one, though, I'll keep her in suspense. Okay, so this might be something that you hear quite a lot of. So EBIT is an Americanism. I've always worked, before I set up my own business, I always worked for American corporations. So EBIT's been around for a long time for me, but EBIT across Europe is more recent in the last five years or so. So what it actually stands for is earnings before we take account of the cost of interest and tax. But that earnings thing is what confuses us. So when you hear the word earnings, put it into a term that we can understand. Call it profit. So the 30 of us that are on this call, I'd like us to start a campaign that there's no such thing as EBIT. We want to start calling it PBIT, because then everybody else in the world will understand what it means. So it's profit. How much profit do we make before we deduct the cost of interest that the bank charges us for borrowing money, and before the revenue, the HMRC take away their tax performance. So really, it's a measure of our business performance before some outside influences. So if we went back to Shan Limited, where I had that profit of 150, I didn't write down any interest or tax because I didn't want to confuse it. So actually that 150 was EBIT. If there was some interest and tax, maybe of 10 interest and 10 tax, the EBIT would have been 150, and the net profit would have been 150 less 10 would have been 130. So EBIT is business performance. But then we had another one, and even Dan was asking me about this one this morning. We've got EBIT, but then we decided to make it quite musical and put a da 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 on the end of it. So what the hell's that all about? Oh, this is another measurement. So it's the same as EBIT, but not only do we deduct the cost of interest and tax, some businesses like to not include in their profit as a measurement depreciation. Oh, and another, which I thought was French, but my 14-year-old daughter has told me now it's Latin, so I now have to change my spiel. This thing called amortization, which all we need to know right now is it's the same as depreciation. It's just another type of depreciation. So EBITDA is how much profit do I make before I incur cost of interest, tax, and depreciation. Because depreciation is an accounting adjustment, some businesses like to say, I want to measure it without that accounting adjustment. How much money are we really making before finance do this depreciation thing? All the measures are important. Net profit, how much profit are we really making when we take all of these? How much EBIT or how much EBITDA? They're all important measures. They are just different at different points through the P&L. I already did this one for you. So margin is profitability expressed as a percentage of sales revenue. So gross margin is what's the gross profit as a proportion of revenue. EBIT margin would be what's the EBIT as a proportion of revenue. So on Shan Limited, EBIT, we had 150, revenue of 1,000. So a margin 150 over 1,000 is 15%. So the EBIT margin would be 15%. Uses the same numbers. It's just a percentage measure as opposed to a pounds or dollars or euro measure. Okay, Naomi, here you go. Just for you. An accrual is a cost that we've incurred, but the supplier hasn't sent us the invoice. So when we produce our financial statements, we have to check that we've got all of the costs included. So usually we can collect all of our costs through the suppliers sending us all the invoices, but it might be particularly towards the end of the financial period that we've had some work done. Maybe we had a contractor that came, did some stuff, or maybe we had something delivered right at the end of the month. We want to close our books. Maybe we spent 100 on the contractor, but they haven't sent the invoice in. So what we need to do is we need to make an adjustment as if we had the invoice. So we need to make an accrual. We need to accrue the cost. So when your finance department are running around at the end of the year saying, have you got any accruals? Got any accruals? And you'll say, I don't know. You're looking in your drawer and under your desk and everything. It's because they want to know, have you incurred any costs where the supplier hasn't sent you the bill? Because we need to know what the costs are. Because you have to put the costs into the period you're reporting on, not necessarily when you receive the invoice. It's when the work was done. You can check out now, Naomi, you've got what you want. Okie doke. So there is a lot of jargon. This is just a little bit of a sample. You know, I believe once you get through the, you know, EBIT, stop using the word earnings and use something that we understand, profit. You know, how much profit do we make? Margin is just a percentage versus, you know, versus an absolute number. We've got lots of different names for revenue, but it's just what do we get for doing what we do. CapEx, OpEx just dictates which financial statement we want to put something on. Once you start to get some of these basic pieces of jargon, and you think about the example that we used with Shan versus Shan Limited, actually the principles start to become a lot more familiar. So instead of looking at your financial statement and it's a tsunami of jargon and numbers, once you start to understand one or two of the basic principles around, you know, P&L's measuring performance and what revenue is versus what profit is versus margin, gives you the ability to ask questions from a point of intelligence. If we've got too much information coming at us, we tend to try and run away because we think, I can't ask 20 questions here and I don't know where to ask the one important question. But once we start to get through all of that jargon, we can then start to ask some straightforward questions as to, in our business, what do we put in cost of sales versus overheads? Because you know the difference between cost of sales and overheads. How do we measure our EBIT or EBITDA? How do we decide in our business what's OPEX versus what's CAPEX? Because once you know one or two of those basic principles, you can ask some questions. And I think that's true in life. Once you've got a little bit of knowledge, you gain more knowledge by asking questions. But sometimes with finance, it's a bit tricky to know where to start because there's so much coming at you in terms of numbers, jargon, finance people getting in the way of common sense. Apologies to any finance people in the room. I'm a finance person, so I could say that. Okay, so there you go. 45 minutes has flown by there. What I'm also prepared to do, because there's all sorts of information. I saw this little cartoon yesterday, so I thought that was quite amusing. I think it might be related to some of the government announcements at the moment. Some of the graphs that first came up in March, and what the hell's furlough, and this is unprecedented times and things. So we need to find some more jargon here to help us. So what we could try to do. I'm not noticing there's a few questions already hitting the chat box. Feel free to ask a few more. It might be easier if you could tap them out on the chat, and then if we don't quite get to them, we can answer them afterwards because we'll have a record of them. I can see one right at the bottom for starters while you're thinking about this. We'll have 10 minutes or so on this. ROCE, sometimes described as ROCE or ROCE, is return on capital employed. So careful what you wish for when you ask these questions. So it's return on capital employed. It's a finance KPI, key performance indicator. So return means how much profit did I make? So we tend to use the EBIT profit. And the capital employed is how much assets have I got invested in this business? So you would go to your balance sheet and look at your assets. You would then go to your P&L and see how much profit we've got, and you use that as a proportion. How much profit am I making as a percentage of how much money I've got employed working in this business? So, it would be another way. So another example of that would be if it's your savings. If Sian has got her £5,000 in her ISA, her capital employed is 5,000. If her annual interest was 5% on that, she'd be lucky to get that at the moment. But if she got 5% on her ISA, her return on her capital employed would be 5%. It's that type of calculation. What else have we got here? We've got I've
got another one from Naomi.
Yes, on depreciation.
So I understood depreciation to be a financial recognition of the decreasing value of an item such as vehicles, equipment, etc. Have I misunderstood this?
No, that's a good way of thinking about it, but it's less about what the market value is of your piece of equipment. It's more about that I've got a piece of equipment that I'm going to use for many years. What I want to do is I want to show that that's going to belong to me for 10 years. It's an asset, so I put it on the balance sheet. But because I'm using it over 10 years, I move 1/10 of it, the original cost of it, onto my P&L as part of my annual performance. So if I've got a machine to make leather pots and I'm going to use it for 10 years and I pay £1,000 for it, I want to say that I'm using £100 of that a year. So I put it onto my P&L once a year to show that I've used £1,000 worth of my asset. So it spreads the original cost of the asset over its business life, its useful business life. It may or may not, after 5 years, still be worth half of that or not. It's irrelevant, really. It's just saying that I originally bought it to use it for 10 years.
Okay, fab. Because I think also she asked, Naomi asked a question earlier, said likewise, does it account for increased value in property as well?
No. So you from time to time, it's a technical thing, from time to time we recognise that property appreciates rather than depreciates. So a company every few years might revalue their assets, particularly if they want to value them up. But generally the rule of thumb is that your assets are valued at original cost. But like anything else, you know, there's deviations to that. But generally, you know, we value our assets at cost, not market value.
Thank you. I hope that's answered your question, Naomi. Okay, thank you. So thank you very much. Has anybody else got any questions they want
Yeah,
to
fire
put?
them away. I was.
Anybody, if you want to, or if you want to unmute yourself and ask a question, please feel free.
Yeah, we could do that. As there's not too many. It's fine as well.
I think you've explained so much today, Malcolm. To be honest with you,
Well, that or I stunned them.
I've taken so many notes and so much away from this, and I actually had I have sat in a financial training before, but it just completely went over my head. But that's really broken it down for me, and now you compare it to actually personal life and where all those were sit. That's been really great for me today, I think, personally. But
for me, it's not that difficult. The fundamentals is, you know, money comes in, money goes out. Have we got left? Have we got stuff? Have we got money to do what we need to do with it? It's just about measuring the situation in the same way, you know, very simply you would measure your monthly performance with managing your salary or your income. And then looking at the bigger picture and looking at your wealth. Businesses do exactly the same. So, you know, they create a plan as to what we want to do, and they call it a budget, and then they measure against that. And then we might need to update the budget because it might have changed, and an update to a budget is called a forecast. And then we do another budget next year, and then we might change it quarterly, and that's a forecast. You know, it's just planning what you need in order to make your business objectives. So, you know, whether you're you know, a public services company or whether you're a private commercial company, the principles are exactly the same. You need to make money in order to meet your outcomes. So your outcomes might be to make money for the owners or the shareholders, or the outcome might be to make money so that we can provide our charitable goals and things. But the principles are the same. We need to have money coming in. You know, we need to have money going out, and we need to manage that. We need to measure what's happened over the period, performance, P&L, and what have we got, you know, to maintain the future.
Yeah, fantastic. No, it's great. Honestly, Malcolm, it's been fantastic. And we've also, Linda's just said how brilliant it's been today. It's really clear, great way to explain, using the comparison between Sean's finances and business again. So that's great. We've got another comment here. Says, I work with the system and minute and audit meeting quarterly, and this has really helped understand the conversion.
Fantastic.
Chart. Exactly, yeah. You know, I'm sure many of us sit in board level meetings or have, you know, within middle management, etc. And you know, you hear all these terminologies. EBITDA for me was just that I just couldn't get it at all. But it's really helped break that down. So thank you ever so much for that today.
So, you know, it's just the language. So
yeah,
I've been using EBIT and EBITDA a long time because they're Americanisms, but when it started to, you know, into Europe through some legislation that we're using global language, it's like, it doesn't make any sense. You know, the receivables and payables was beautiful for me because that's, you know, that works. But, you know, why say earnings? We need profit. So, you know, we need to call it PBIT and PBITDA. Then, okay, now I get it.
Yeah, no, definitely. Well, can you tell us a little bit more about the 1 day session that you do, Malcolm?
Yes. So I've actually got a few things here just generally for us. So I know a lot of you know Lindsay because she's very, very active, and you know, particularly during this period where all of us, whatever we've been doing, we've been reinventing ourselves. So there's a few things here you may or may not know about, but you know, we just love supporting you. So we've got a private learning group within Facebook. I'll give you these slides, by the way. I'll send them out to you, or send them so they're available. But there's access to our. You can apply to join our private Facebook. You know, we do lots of stuff, commercial stuff, as well as commercial learning, as well as you know, softer skills and personal development. So we've got a prospectus you can download as well. Lindsay's been doing this lunch and learn, and actually got me involved in it. So I've been involved in doing that as well, and a free chapter of a book. But here's the other information. So we are running a one-day. It's IAM accredited training course. It's actually part of the IAM certification level 3, but it's, you know, you can attend it independently. You can click through and have a look at it on our website. We've made it a virtual one, so it will run similar to this. I would say it'll be a little bit more interactive, because we won't have 30 or 40 people on there. But it will be run across the day in two sessions, probably 2.5 hours in the morning, a nice chunky lunch break, and 2.5 hours in the afternoon. And as we're doing that during August, we're running that at a discount price of just £250 on that. So it's 12th of August. It's virtual. If you would like to attend that, we will do, you know, some of the things. You'll have a great start having done what we've done today. But it does some other things around, you know, going into depreciation a little bit more, lots more jargon, looking at managing and planning budgets, because I know a lot of people you know, involved in budgets. Actually, I'm just going to do a quick poll here. I meant to do this at the beginning, Dan, but maybe while we're just chatting here, I've got a little poll here just to see, you know, how people are involved in finance. We've got a little bit of a clue from some people there, but within your current or past roles, what sort of financial responsibilities do you have? Do you have to manage a budget, or maybe do you hear loads of jargon because you're attending meetings and, you know, have some statements to say? I'm just interested, out of a quite a good population of 25 people here, you know, what's the level of involvement? So I'll give you a couple of minutes.
First time I've seen a poll on Zoom. I've never seen that before.
I meant to do this right at the beginning as the setting. I got so excited I was up and running. So.
Hey, brilliant! Thank you.
So let's have a little look here. So that's, at the moment we've got yes a little, quite a lot of people. Yes, regularly, quite a lot of people. Yes, it's part of my role. So those of you that are, you know, CFOs for supporting CFOs, you'll hear loads of this stuff. So actually, the not at all piece, the not at all. Anybody else hasn't go, and I'll end it, and then you can see it. It's quite a good tool, this, Dan, if you haven't seen it. You can share the results with everybody here.
Oh, fantastic!
There you go. So about a third of you, have a little involvement, and if we add the bottom two together, what's that? 45%. So nearly half are regularly involved in finance, and less than 1 in 5 at the moment, or historically, haven't done that. So I can let you into a secret. So Lindsay hates this stuff. So anything that's finance related, she's like, this comes up. And I would say in some cases, it's a bit of a generalization, but in some cases, that's true, of a lot of non-finance related functions. So they might have a responsibility for it, but actually because they don't really understand it and nobody's taken the time to explain it, or at least explain it in a way that's understood. Sometimes your finance team might be really good at explaining it. Sometimes they might not, because it's all very well understanding finance, but if you're not a trainer, then it can be tricky. But this poll here just shows, how important it is to have a little bit of knowledge, a little bit of understanding, so that actually you can, feed your curiosity, learn a little bit more, do a little bit online, attend a course or two, chat with your you know, with your friendly finance people. They love sharing this stuff. It might be how they share it. So, you know, the call to action here for me would be for all of you to, you know, now you're slightly armed and dangerous. You know, go and find out some more. Go and ask. Go and have a look for stuff where you can learn some more. But go and ask your finance people as to how do we do this or how do we do that, or, you know, for us, what does this mean? I gave you some examples of that. And, you know, if you're brave enough, you know, spend a day with us, and we'll do a little bit more. It's all very friendly. You know, you don't need to be worried.
You know what, honestly, literally, I mean, you can see in the chat box how much everyone's enjoyed it, Malcolm. We're really grateful. I know you gifted us to this, you know, you gifted this to us today, and I am very grateful. You and Lindsay have always supported us so much, and so I'm very, very grateful to that. So I just want to say from behalf of us, thank you all so much for joining us today. It's been an absolute delight.
I just think it's fantastic that 20, 30 odd people want to know more. You know, so for some people it might be a challenge, and perhaps virtual's a little bit easier because if you know, you can you can turn your video off or walk away or something rather than being in a classroom. It's not that tricky, folks. It's just, you know, applying to logic. So, you know, thank you very much for being with us.
We'll get the video uploaded onto the PA Forum YouTube channel today. Or we would just ask you, please do give Malcolm a share on social media, and just, you know, if you've enjoyed the session, please let everybody know, because he would be really grateful for your feedback. You know, it's always nice to just take that time just to say thank you publicly. So if you do get the opportunity, please do that, because again, he's gifted his time to us today, and we're really grateful.
I've enjoyed doing it. Thank you for the opportunity.
No worries. Our next session is going to be on Tuesday next week with Diana Brandor, which is all about the future of the assistant role. That's going to be on Zoom. So if you want to join us next week, that's 12 o'clock, and I'll send a follow-up email out afterwards. But thank you so much, everybody, for joining us today. Malcolm, it's been a delight. I hope you all have an absolutely awesome weekend, and look forward to seeing you all next week, hopefully. Thank you very much.
Thanks, everybody.